To help set up our trading day, we welcome in Kevin Hincks, co-host of Fast Market live at the CBOE. And we certainly have a lot to watch for this week ahead, including eco data, earnings. Good morning, Kevin. Great to see you.
Good morning, Nicole. Yeah, there's less volume than in weeks past leading up, but significant. The events we'll get this week will be significant. Like, first and foremost, CPI data on Thursday. And for your viewers, they kind of flipped it. It's Wednesday PPI, Thursday CPI. So CPI actually coming second this week, but it'll be an extremely important number because we are now in the Fed quiet period. And so leading up to that, we're 9 days from a Fed meeting. Leading up to that, speculation will rise. You've already seen some notes coming out this morning from different firms about what they feel about the upcoming Fed meeting. So I think that is going to set the tone. The CPI data that we get will hammer home what the Fed is thinking ahead of that market. So looking at the market this week, coming off of last week where we got so much data that showed weakness in the labor market, even though we still have a 4.3% unemployment, remember, the last 12 months of the Biden administration, they averaged, Nicole, 41,000 government jobs per month. This year, since January, we're negative on that number. So it's a different kind of economy that we have to be watching for. But right now, the meeting coming up in 9 days, that now the speculation went from none or 25 basis points. Now it's 90% chance of 25 basis point cut and a 10% chance of a 50 basis point cut. Why? The data that we got out last week showing weakness in the U.S. labor market.
All right. I saw at one point 100% likelihood of cuts is still pushing for even 50 basis points. And Barclays and others are out being a little more aggressive with how many cuts we're going to be getting.
Yeah, Barclays came out with a note this morning and saying, based on the data, they see now 3 cuts in 2025, starting in September, and then 2 more cuts in 2026. JP Morgan came out this morning with a note saying they see a 25 basis point cut, not a 50. Well, that's just the probabilities that the CME FedWatch tool is giving. Right now, it's 90%. 25 basis points, 10%, 50 basis points. We'll see. Remember, that's a moving number. We'll see how the data changes. And the CPI data on Thursday will probably move that more in one way or the other. Right now, it looks like a 25 basis point cut is on the calendar for the meeting starts September 16th. It finishes up on the 17th. So a lot going on there. In terms of earnings, it's less names, but still names that are significant. Tuesday after the bell, we'll get Oracle. That'll be a good one. Wednesday morning, we'll get Chewy. They got an upgrade this morning. Then Thursday, before the open, we'll get Kroger. After the bell, we'll get Adobe. Those are the big names for this week, Nicole. Like I said, less numbers, but still some pretty important names.
Sure. I mean, without a doubt. And, I think about the big picture here. We're coming off of that jobs report with 22,000 jobs and had an uptick to 4.3%. I know Scott Bessent said they're going to really look into how people are responding to the questions about jobs. I think that's part of the underlying issue in the jobs picture. So maybe they think it's going to get better going forward. But that Friday print was not a good one.
Yes, exactly. It was low in terms of the overall numbers. Like I said, government spending or government hiring was down again this month. But you're right. There was weakness. Here's one interesting thing, though. The June number got revised lower, but the July number actually got revised up by 6,000 jobs. We don't see a lot of upward revisions coming, but you're right. That number on Friday drove home the need for lower interest rates because, like Jerome Powell said at Jackson Hole, their focus may be pivoting away from inflation and back towards the labor market. We'll see how that plays out. His comments on the 17th will be vital to set the tone for the coming months. Remember, on the 17th, we'll get more SEP. So that is another really good look at the economy going forward from members of the Fed.
Yeah, understood. All right. How about the OPEC story? Let's just get that in. I don't want to miss that.
Yeah, OPEC, crude oil futures up almost 2% this morning at over $63. Why? Even though OPEC Plus came out with increases in production, remember the market trades off expectations, and the increases in the past were 500,000. This one only comes out 137,000. That's perceived as less than expected. That's why I think you're seeing a bounce in crude oil futures today. And even though OPEC Plus admitted this is for market share, it's not because they actually see demand may weaken in the future and there may be supply gluts in the future, but because of market share, they're raising output, but only by a fraction of what was expected. That's why you're seeing crude oil futures a bit stronger this morning, Nicole.
Okay, great to see you. Kevin Hincks, thank you.